Hey everybody, Boris, let's begin Forex. Welcome to our weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, July 30th to August 3rd, 2018. And the COM dollar front basically consolidated at the lower end of the ranges this week, with the exception of CAD, which was the breakout star, as we had noted last week. But now I think is really coming up against some very, very key support that's going to be much harder to break. We don't have a lot of data on the calendar this week in the COM dollar land. We have a little bit of data, but nothing I think that's going to be earth-shattering and market moving. It's really primarily going to be pro-dollar, anti-dollar trade that moves it around. But we'll take a look at the charts and see where the possibilities lie. As far as the ranges go, they remain relatively the same. It's still a 73.75 trade in Aussie. We did give up the 74s and then came back and recaptured them today, so that was a relatively positive. Still 69.67 in Kiwi, and the CAD trade really getting close to that very, very important 130 level, which was the target for us last week, and I think now at this point is going to be much more likely to be a support. Let's take a look at the charts here. Oh, sorry, let's take a look at the calendar first and just see what's on the calendar first. So starting the week on the COM dollar land, we don't have too much. Sorry, let me get back to Monday. We don't have too much on the calendar as we begin the week. We do have, I believe, PMI, no, the employment data on Tuesday out of New Zealand. That should be interesting. Kathy is actually bearish that because we had weaker job growth in manufacturing. Generally, a weak print here could hurt the Kiwi a little bit more. But I do think that this 67 level is a very, very strong hold unless we get a very tough move on a pro-dollar move basis. This is something I talked about in the other video, that if the U.S. data really begins to shine and completely outperform its expectations, then yes, the COM dollars are very much under threat because the interest rate differential trade becomes even more exacerbated at that point, especially against data that probably is going to be more negative than positive as we go forward. Nothing else really on the calendar. We do have, I think we have CAD GDP on. Where's the CAD data? We have Aussie trade balance. I thought, yeah, here it is. CAD trade. I thought we had CAD GDP. Maybe I'm wrong. That's about it. No, we don't really have that much. We do have Australian retail sales also, where we don't have any kind of view on the Australian retail sales. So as you can see, very, very quiet week as far as COM dollar data goes, and it's really going to be driven, I think, much more by dollar data as we go forward. So let's take a look at the charts and see how they set up. So Aussie holding bid here, 73 still remains very, very solid support. Big reversal yesterday, come back a little bit today. You sort of, you could take a small gander here that we've held the higher lows, and therefore kind of taking a small bet on Aussie against this 73 support. Probably is a halfway decent trade, but we really ran out of gas after the inflation data just wasn't there. And I think ultimately when you're looking at Australia right now, it's really not being driven by anything Australian. It's all going to be driven by what the U.S. data says. And it's really going to be a much of an anti-dollar trade if it works. Kiwi, same kind of a thing. It's basically a microcosm of the impact of what Australia was doing. Big reversal, come back, still holding higher lows. So a small, mild bet to the upside could be okay here. But really, nothing kind of screams at you that this is going to be a massive trade to the upside. It does look more constructive to the upside than it does to the downside at this point, and that's about the only thing you can take away from it. Now, dollar CAD, which was always a darling of our trade, we did like that a lot towards the 130, and it did finally break. Oil prices helped. Generally, Canadian data has been sort of okay, but as you look into the trade over here, yes, we have lower highs. It's had a big sharp move to the downside, but Canada is notorious for kind of making big moves and then consolidating. Does it have a chance to make the 130? It does, but I think this is the key thing. Once it hits 130, it's going to have a very, very hard time breaking through unless, and this is a really critical thing, unless we have just horrible U.S. data and it just basically becomes a broad dollar sell-off, against which then probably we take out the 130 and probably take out 129.50. But apart from that, I find it hard to get too excited about a short here You do have a modest amount of trade here towards the 130, but that's about it. The really big trade in caddy was last week. That happened, and for now, I think you kind of just wait and watch and see how the data develops. Ultimately, though, the calm dollar trade is really the anti-dollar trade. If we get negative dollar sentiment coming through the week, we're certainly going to get a little bit more pushes in all the commodity dollars. Other than that, it's just kind of very quiet and steady as the week progresses. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.